Are joined by Professor Uche Uwaleke, who is the Director, Institute of Capital Market Studies at Nasarawa State University, Keffi, to discuss the latest GDP figures for Nigeria for the fourth quarter of the year and, of course, full year 2023. Professor, you're welcome. Thank you so much for joining us. I guess, what would you attribute the higher economic growth we saw in real terms in the fourth quarter, 3.46%, to the third quarter, 2.54%? Would it be perhaps the festive season? What's your assessment?
Well, of course, overall, we recorded an improvement in terms of sectoral performance. If you look at what the MBS released, both the oil sector and the non-oil sector showed improved performance. The oil sector in particular moved from a negative territory, minus 0.85% in the previous quarter, to as high as 12%. Okay, so I think the performance was largely powered by what happened in the oil sector, and you can also attribute that to the increase that was recorded in oil production. Oil output increased from 1.45 million barrels per day in Q3 of 2023 to 1.55 million barrels per day. So that increase contributed to the surge we saw in oil sector performance. Even the non-oil sector, we also recorded an improvement from, I think, about 2.75% the previous quarter to over 3% in Q4. And if you disaggregate that data, you would find that even in the agri sector, also recorded marginal improvement. It used to be 1.3 in the previous quarter, but now 2.1. We also saw improvements in the manufacturing sector, and a couple of others. But of course, there are sectors that tanked. The inflation, rising inflation of that quarter, may have impacted on trade. Trade dropped. Trade, as you know, contributed about 15% to GDP. Trade dropped. ICT, that contributed about 16%, also dropped. And we also saw a drop in real estate. Of course, the rising price of cement, could have also affected the performance in the real estate sector. But overall, one would say it was an improved performance over the third quarter performance. But of course, if you take it on an annual basis, compared to what we had in 2022, there was a drop from 3.51% to 2.74%. And it actually came lower than what many people had predicted for 2023. I recall PwC had projected 2.8% GDP growth rate for Nigeria in 2023, but it has now come in at 2.74, again below what Nigeria projected in the 2023 budget of over 3%. So one would say on an annual basis we saw decline, but quarter on quarter, what I mean by quarter on quarter means compared to third quarter of 2023, again on a year-on-year basis, we had some improvements.
Okay, and Prof, there's so much to get to. You just mentioned the annual growth now, 2.74%. Prof, what do you make of the arguments of Nigeria's population, with respect to whether it is an asset or a liability? Because, you've said this in the past, we have to be growing ahead of our population growth. And you can see this, going all the way back to 2015, 2.79, we had two recessions, 2016, 2020. And then since the recovery in 2021, we've been slowing. So are you satisfied with this type of growth? Should we be doing 4, 5, 6%? Well, what do you make of our growth on an annual basis?
Of course, our growth rate has been quite tepid, quite weak. We often say GDP growth rate is a necessary condition for economic development. And for that to happen, an economy such as ours, needs to grow at an average rate of 7%, per annum over a long period of time. And that, of course, would mean staying well ahead the population, growth rate. So unless we get to that point, as long as population growth rate continues to exceed on the average, GDP growth rate, we are going to continue to have, challenges with inclusive growth, challenges with, economic development. Now, talking about inclusive growth, again, it's not just about growth. I always say it's also about the quality of the growth. The source of that growth is what is important. So our policymakers should always be looking at the numbers released by NBS and be asking the question, what is actually the source of this growth? What is the quality? So by quality, I'm also referring to which sectors are actually powering growth. Now, if you look at the just released report, you will notice that for the full year, for example, by the way, there are three sectors in the economy. For the purpose of what I'm about to say, three sectors. You have the agri sector, you have industry, and then you have services sector. Now, the agri sector for the full year grew by just 0.7% for the full year. Now, for the industry sector, it came in at about 1% or so. Okay, but it's the services sector that grew by over 4%. Okay. So when you have that kind of growth being powered by the services sector, okay, then you may not really see the kinds of improvements in the welfare of the people, and that's because the services sector, unlike the manufacturing and agri sector, in terms of employment elasticity of the sectors that are actually powering that services sector, okay, though that is very weak. Now, if you look at the services sector, for example, the financial services sector, stands out. Where you have the banking and insurance, and of course, the banking dominates by over 90%. Okay, so the question to ask is, if the services sector, if the banking and insurance that grew by 29% in the last in Q4 of 2023, by 29%. Okay, so if that sector is growing by as much as 29%, the question is how many people are employed in that sector? So you may not really see the impact on the lives of the people, okay? And that is why I usually don't find it, acceptable when people refer to what is happening in the financial services sector, when people refer to the performance in the banking sector, or refer to the performance in the stock market, for example, as evidence that the economy is doing well. Okay, that is a very faulty conclusion. That the stock market, for example, is doing well today, year-to-date return today is above 35%, and a lot of stocks are appreciating, doesn't say that the economy is doing well. And that is simply because we cannot use the stock market performance as a barometer for the economy in Nigeria. Unlike in the US, for example, where the stock market's market cap is over 100% of the economy, the country's GDP. So Donald Trump, remember, during his time was always making reference to stock market performance. Okay, so today Joe Biden can also make reference to the performance as a barometer for the economy. The same thing goes for South Africa. Okay, today Cyril Ramaphosa can also point to the performance of the Johannesburg Stock Exchange as a barometer for the South Africa's economy. And that's because the equities market in South Africa is about 300% of the size of the South Africa's GDP. Not so with Nigeria, where it is just less than 20%. Not so with Nigeria, where you have 155 companies that are quoted, and just 10 of these companies account for over 70% of market capitalization. If you remove today likes of Dangote Cement, remove Airtel, remove Bua Cement, remove MTN, remove Geregu, the market goes down. Okay, so that tells you that we cannot be pointing to the stock market performance as a barometer for the economy. I know why I'm saying this, because a lot of people have always confused it to say because the market is doing well, because some banks are doing well, therefore the economy is doing well. That's not true. Okay, and we can also see that even in the GDP numbers. Look at the manufacturing sector. Again, back to the point I'm making. Except we grow the productive sectors of the economy, manufacturing, agriculture. You can see the growth rate of manufacturing sector. As I said, for the full year last year, just a little above 1%. Okay, agri sector under 1%. That you can see why we have this. We have an inflation. So the challenge we are having in these sectors are now manifesting, even in inflation, and that's why today food inflation is where the pressure is. Okay, so until we change the structure of this economy in favor of the primary and secondary sectors, in favor of agriculture and manufacturing, as opposed to the tertiary sector, which is services, I'm afraid we may not still achieve the kinds of inclusive growth we desire. Because inclusive growth means that it is that type that creates jobs. Okay, you can't be growing as an economy and then unemployment rate is high. So it's only when you have inclusive growth that will also guarantee income. Income inequality is narrowed. All right, and you can only achieve that when you use the productive sectors, when you use the employment elastic sectors of the economy, as opposed to just the services sector, the finance and banking. So I hope my point is clear.
It's very clear. Excellent point on this talk. Prof, we got to go. Only have less than 30 seconds. Really quickly, the oil production, that is Nigeria's lifeblood. That's where we get our foreign exchange. Very, very briefly, Prof, should a state of emergency be declared in the upstream sector for oil for Nigeria as we look at oil production and so on?
Yes, I think so. We only did 1.55 million barrels per day. In the budget, we have provided for 1.79 million barrels per day. So that tells you that there is still a gap. Okay, so I think there is need to continue to ramp up, oil production at least up to our quota, our OPEC quota. And it's only by so doing that you can expect that at least that sector will help us generate the kinds of revenue we have provided for in the 2024 budget.
All right. Professor Uwaleke, Director, Institute of Capital Market Studies, Nasarawa State University, Keffi, thank you so much for joining us to talk about Nigeria's latest economic figures. We appreciate it very much.